Hey everyone, today we're going to be talking about Weatherford and Weatherford WFT, whether this stock is a buy or a sell, or is it a crash, or what's going to happen with this company right here. That's what we're going to discover in this video right here. So hit that like button, smash that subscribe button, and let's get started without any. I just made $5 million. $5 million. That's $5 million the past month investing. As you can see, I have more than $100 million. Subscribe to my channel so I can teach you how to make millions.
Let me tell you about my day so far. Coffee in Paris, surfed the Maldives, took a little nap on Mount Kilimanjaro. Oh yeah, and I got digits from this Polish chick in Rio. And then I jumped back for the final quarter of the NBA Finals. Courtside, of course. And all that was before lunch. I could go on, but all I'm saying is, I'm standing on top of the world.
Hey everyone, today we're going to be talking about Weatherford and Weatherford WFT, whether this stock is a buy or a sell, or is it a crash, or what's going to happen with this company right here. That's what we're going to discover in this video right here. So hit that like button, smash that subscribe button, and let's get started without any further ado. So when we look at Weatherford WFT, we can see that it has a negative earnings per ratio. We could see that the PE ratio is in the negative range, no dividend. And when we see the technical analysis, we can see that in the monthly, we can see that it's a strong sell for Weatherford, because when we look at the Weatherford company, it's been going down. And when we look at the weekly, same thing, strong sell. But the daily, also a sell. But now when you look at the hourly, it's a strong buy. So we can see that WFT picked up during the last hour, and it seemed to come up finally. That's why we see AM Texas LOL WFT is up finally. That was actually 11 hours ago. That was when the market, right before the market closed. And when we can see, we see this character right here, Omar. We will test 80 now, I believe. Tested the low at 60 and bounced up. And we can see other people, what they have to say. It's a penny stock. It's still necessary. Avoid the stock if you hate money. LOL. I'm all in. And I agree. WFT seems to be on a downtrend. It seems to be a good place to lose money. It's pretty much gambling at this point. And WFT has very little chance of bouncing up. Even though I'm not saying it will never bounce up, you might get lucky. That's why it's a gamble. But for the most part, it seems to be going on in a downtrend over here. You can see the negatives, the earnings is in the negatives, and we can see can see the operating margin, and pretty much this company has been losing money with its operating income and with the revenue and pretty much everything. This company has been on a downtrend. You can see when we look at the moving averages, we can see that it's a sell. Technical indicators also telling us it's a sell. We can see that over here, March 2003 says WFT with at least 10 million short shares and an average volume of 32 million. It's safe to say that the shorts aren't covering it. You see Jose, I love the market. Yesterday this thing was going to 53 cents. Monday it's going to $1. I disagree, but it's your money, bud. We can see what else other people seem to have said with this. We can see that Technicraint says that it's gaining 13 cents within a single day. Good move off the cross trend line, and I'm absolutely loving this stock, and I'm never going to sell. I was curious if anybody knows, with oil slightly down today, why it's up. And all these people are pretty much bullish. WFT, nice bounce at support in 50. Went against my own rule, bought a small position. Insider's been unloading checks on SEC filings, but took a chance. I gotta step out of this for the weekend. And great week for US Bulls. I hope more to come next week. Enjoy the weekend. Be here Monday. According to Finwiz seems to think that it's a strong buy. So this seems to be contradictory to investing app. Now when we already know that the financials is in the negative, and it seemed to have been doing poorly. When we look at WFT, we can see that the health is looking okay, the future is looking okay, the value looking okay, but the dividend and the past is looking poor. The snowflake description, according to Simply Wall Street, shows that mediocre balance sheet with moderate growth potential. And we can see that Weatherford International has a significant price volatility in the past 3 months. And these are just some of its competitors, looking a lot more healthy than what Weatherford appears to show. When you look at the current, it seems to be supposedly at a good price right now. Share price is 65 cents versus future cash flow at $1.67. So they think this is, Simply Wall Street thinks this will be going up. Weatherford International share price is below the future cash flow value and at a moderate discount, greater than 20%. Weatherford International share price is below the future cash flow value and at a substantial discount, greater than 40%. The bad news is that Weatherford International is loss-making. We can't compare its value to the U.S. energy sector's average. Weatherford International has negative assets. We can't compare its value of its assets to the negative services industry average. This is not looking good. When you look at the expected the future, the expected annual growth rate is 127%. We can see the earnings growth seems to be better than the revenue growth. We can see that the estimated seems to be somewhat close into the expected range, into the actual range. And we can see the past and the future earnings per share over here. And when we look at the performance in 3 years, we can see that it is unable to establish if Weatherford International will efficiently use shareholders' funds in the future without estimates of return on equity. I agree. Weatherford seems to be doing a poor job in managing money and assets. Weatherford International does not make a profit, and their year-on-year earnings growth rate was negative over the past 5 years. Unable to compare Weatherford International 1-year earnings growth to the 5-year average, as it is not currently profitable. Unable to compare Weatherford International 1-year growth to the U.S. energy services industry average, that is not currently profitable. And when you look at the performance per year, we can see that there's a minus 33% return on assets. We can look at it as a 2.56 return on capital. It is difficult to establish if Weatherford International has efficiently used shareholders' funds last year. Return on equity is greater than 20% due to its liabilities exceeding its assets. It is difficult to establish if Weatherford International has efficiently used its assets last year compared to the U.S. energy services industry average return on average, as it is loss-making. It is difficult to establish if Weatherford International improved its use of capital last year versus 3 years ago. Return on capital is employed, as it is currently in the loss making. These are all negative news for WFT. But the good news is that Weatherford International is able to meet its short-term 1-year commitments with its holdings of cash and other short-term assets. Weatherford International's long-term commitments exceed its cash and other short-term assets. That's the bad news. And we can see the decline, the historical decline over the years. Weatherford International has negative shareholder equity. Liabilities exceed assets. That is more serious situation compared to with a high debt level. Irrelevant to check if Weatherford International debt level has increased, considering it has a negative shareholder equity. Operating cash flow is negative, therefore debt is not well covered. Weatherford International is making a loss, therefore interest payments are not well covered by earnings. And we already know that. And we know that it is unable to evaluate Weatherford dividend yield against the bottom 25% of dividend payers, as the company has not reported any payouts. This company does not have any payouts whatsoever when it comes to dividends. Unable to evaluate Weatherford International dividend against the top 25% market benchmark, as the company has not reported any payouts. Unable to form a dividend volatility check, as Weatherford International has not any reported. Unable to verify if Weatherford International's dividend has been increasing, as the company has not reported any payouts. Unable to calculate sustainability of dividends, and you guys get the picture. No need to calculate the sustainability of Weatherford International dividends in 3 years, as they haven't been paying any dividends. Here's the CEO. Here's the manager of Weatherford. And we can see all the information. He has a tenure of 2 years, compensation of 10 million. This dude's a millionaire. Mark A. McCullum serves as director of Westlake Chemical Corp since May 18, 2018. He has been the chief executive officer and president of Weatherford International. And we can see Mark's remuneration is higher than average for companies of similar size in the United States of America. Insufficient data for Mark to compare compensation growth. The average 10 years, 1.5. So he's been there longer. Average age, 56. And you can see all these other chairmen and compensations in 10 years. And we look at the board of directors, 3.3 and 65 average, and we can look at all the information over here. No 3-month insider trading information. That's good. And we look at the news. We already know that there's no major news in the short term that affects the market directly. No major news. And we can see, we can take a look at the location of this company being in Switzerland. Take a look at the staff of 26,000, and we already know that it's in the oil and gas equipment and services and the energy industry. According to Stock Predictor, we can see for WFT, we can see that we are predicting with Stock Predictor that the high is going to be at 73. The lows will be 72, around 72. We're predicting for the next trading day. The overall score for WFT out of 100 is 24, which is very poor. The short term, 6, very poor. Long term, technical aspects of it, 8, very poor. But the fundamental aspect of it, 58, not bad. You can see the analyst forecast over here. We can see we're looking at a major decline with a minus 87% low, the median 164%, the high 600%. That is crazy, 600%. We can see that the average analyst recommendation over here is a hold. This is according to Stock Score Report. This is all according to Stock Score Report. Don't forget to smash that subscribe button, hit that like button, and we're still not done here. You can see that the analysts over here are very mixed with Weatherford, and we can see that the historical growth grade is an F. So we got a very poor grade when we look at the historical grade. And we can see why. Look at these. The earnings per share and the equity, not good. You can see the year, the YOY growth grade, and we can see similar trend. We already know this company doesn't offer any dividends, never has. These are in the negative range, the PEG, PEGY. And we can see that the stock is undervalued, so that's good news. Return on sales, positive. Return on assets in the negative. And we got the return on invested capital in the negative. Profit margin, negative. Return on equity, very poor, and return on equity ratio, very negative. And we got debt free cash flow in the negative. Earnings per share is negative, therefore value price and the Graham number cannot be calculated. The MOS percentage, margin of safety, minus 100%. And we can see the market stage. We can see we have a mixed fundamental. Alert is unknown. Some indicators suggest buy, others suggest sell, so be ready to act. It's all up to you guys. It's all up to you. Let me know in the comments what you guys think. Is this company a buy, a sell, crash? Let me know what you guys think. Hit that subscribe button. Hit that like button. Comparing it to the Vanguard 500 index, we can see that if you would have started with $10,000 portfolio in 1986, you would have ended up a lot more if you would have just invested your money in the S&P 500. Now I'm pretty sure this is obvious for most people since WFT Weatherford is crashing. But interesting thing is you still would have made money if you would have invested in 1990, but you would have lost money after the 90s. So when we look at the CAGR, you can see that Weatherford grows on average of 4% a year, and the best year was 530%. Imagine if you could get a 530% like in the 90s. That was actually during a crash. The 1980, and there was a crash in the late 80s. So after the crash it grew, so it looks like this company may rise after a crash. Is a crash coming? That's the question. We look at the market correlation, it's less than 50% correlated. You look at the Sharpe and Sartino ratio, we can see that it's much more volatile than the Vanguard 500 in the sense of risk to reward. emerging markets and small cap sectors. And we can see the arithmetic annualized 20%, the geometric mean annualized 4%, volatility monthly 15%, annualized 52%. The max drawdown is minus 98%. The tracking error 48%. You can see the upside capture ratio at 117%. The downside capture ratio 157%. Or I should say 157, sorry. Well, yeah, 157%. Sustainable withdrawal rate 19.14%. And this is too much to look at, the monthly returns. And you can see the drawdowns. This is only comparing the drawdowns. Weatherford has really drawn down more than any other time. This is the first time Weatherford has crashed this hard. There you guys have it. Make sure you guys smash that subscribe button, hit that like button, and don't forget to watch my other parts to Weatherford.